Hello guys, welcome into our channel. So in this video we'll be looking at the market structure. Let me assume that you have read about the basics of forex trading as a beginner, like what is a candlestick, the parts of a candlestick, what is a profit, a stop loss, a trailing stop loss, what is an equity, the leverage, a pip, all those few terminologies. Let me assume that you know all those basics. So if you haven't learned about the basics, there is a link in the description below this video. Go and check that video first, then you will understand. So let's continue. Learning about the structure of the market, it forms one of those basics, one of those solid foundations for a profitable and a successful trader. So that is why we think and we have gathered our information from all of you, that as much as you in need of making profits, it is wiser for one to understand the structure of the whole market. So stay tuned as we begin. So basically, the market structure, it determines the phase of the market. In forex trading, it's either we are ranging or we are trending. When we are trending, when I'm talking about trending, it means it's an uptrend, okay? Then it also means it's a downtrend. So when I'm saying we are ranging, it means that the market, it is moving sideways like this, okay? So these are the moves of the market. It's either it is trending, either upwards or downwards, or the market may be ranging sideways. Okay, so those are the main and major moves of the market. Some other moves may be spiking, like the ranging, sometimes they call it consolidation, but these are the two basic moves of the market. So basically, the market structure does not move randomly, but it targets a certain price. So what we'll be discussing today is the institutional market structure. I think everybody needs to have vast information about that structure aspect. One thing I think you need to understand about the market, as much as it has those moves I mentioned earlier, the market moves with impulses. It moves impulses like this. It's called an impulse corrective, impulse correction, the impulse correction, impulse correction. So these are waves of the market, okay? So these waves, they have their own way of being pronounced, okay? Let me show you this thing. This is an impulse correction, impulse, correction, impulse, correction, impulse, correction. Okay, so we say this is the highest price, this is it's lower, the lowest market price. Okay, this is the highest price, it's the high than the previous high. The previous is this one is higher than the previous low. So this is the impulse of the market. So whenever the market moves, know that it respects these structures. So having mentioned that, the market will then, when we trade either the impulse or the corrective. It's either you place your trade, let me change the color here. It's either you place your trade here before the impulse starts, or you place your trade for the corrective, or you wait for the corrective so that you can trade the impulse. What the market does when it is correcting itself, let's say here like this one, when the market corrects itself from the highest market price, when it corrects itself, it must not correct it below the previous low. That is why we are pretty sure that after every corrective wave, the market will also take another long impulse. So that structure, that structural significance is very important. That is where we determine the demand and the supply. Okay. So for you to understand the structure clearly, like you can see the chart here, we will consider please consider this. We will consider an uptrend like this one. Okay, it's an uptrend like this one. I am using a cell phone because many of the beginners, they use their cell phones to trade. So I'm just demonstrating that you can still trade even if you have your cell phone, and you can still analyze. Okay, let's continue. So we will consider the trending market so that you can understand the structure. In the trending market, what we must pay more focus on is that we always break a structure. Okay, we always break a structure. We always have the higher highs. That's where we pay our focus on. Okay, this is the lower highs and also is the higher highs, and also on the market structure we pay more attention. When we pay more attention on the downtrending market, let's say the market now is going down, it's downtrending, we will pay more attention on the lower low and the lower highs. Okay, so that is what you need. Please remember that the moment we stop getting the highest market, the highest price, like the break in structure, it means we are now reaching a stage in the market, the stage which is called it's a shift in market structure. But before that, we have to be very, very sure that now the market is shifting to a different structure. So then after that, we will wait for the break in structure. Like you can see on my chart as we speak, here the market anticipated that there was a shift in the market structure. Like you can see here, on my chart, here there is a shift in the market structure up there. Okay, then there is no break in the market structure downwards. It means that there is still more room to come, and boom, there is a new highest market price up there. So that is why I am saying, if you want to understand the structure, know that the uptrend is concerned with the new highest market prices, the new structures. But if the market is no longer establishing new structures, it means now it will be shifting to downwards. Okay, so that is what is key and vital on the market structure. We are saying in an uptrend, we are looking for the breaking structures, and we are selling their higher highs with the new structures. In a downtrend, we are breaking the lower lows. So we are saying that when we will be introducing the order blocks, the demand zone and supply zone, because the demand zone is found on the uptrend and the supply zone on the downtrend. So please follow us on our next video, where we will be explaining more what are order blocks and how to get the supply zone and the demand zone for being a profitable beginner in 2025. All the best. Please like our video and subscribe so that you can be informed when we upload our next video very soon. Thank you so much. Remember, if you don't have a demo account yet, there is a link in the description below. Just click the link, register your free demo account so that you can demonstrate all these strategies. Thank you. Bye-bye.